All right, traders, good afternoon. This is Christian from Hertz Trade Trade Group, and this is your end of week video. And we'll make it kind of quick. We'll wrap it up. I've done some longer videos this week, so we'll keep today quick and easy. At least I hope so. So, really nice end to the week, right? Strong end to the week. We had some economic data that I guess they liked the economic data today. I'll just kind of leave it at that. Retail sales came in, kind of thread the needle, right? And the reason why I say thread the needle is because the numbers came out positive, right? But like not super strong, because the market doesn't seem to want that, because then you have to worry about inflation and everything else that comes along with that, and that gets into the implications of the Fed, which we'll talk about that in just a minute. And you had the Empire Manufacturing that came in a bit higher than expected, which is a pretty volatile number month to month, right? And then what really kind of also hit the nail home for the day was University of Michigan sentiment, which came in a little bit better than expected. Again, not super hot, but not to the point where things are really weakening and we're starting to see, put that R word in there, the recession word, which everybody seems to be talking about. But then also, if you look further down, the university 1-year inflation expectation came in a little bit lower than expected, both for the 1-year and the 5-year, right? And really, that's what the market is, overly concerned with, right? And we take that to the next level, and of course, it's the Fed. This is kind of what's interesting too, after the data that came out today, as well as yesterday with the PPI data, the implied rate for Fed fund futures, right? So for the Fed meeting on 7/27, this got to, it was implying, I think just yesterday, right before the meeting, I'm sorry, right before the PPI data was pricing in 90 basis points. So we were getting pretty close to implying a 1% rate hike. That is kind of shifted back down. Remember, the Fed moves generally in 25 basis point increments. So it's either going to be 75 or 100. And they came in much, so what the market is expecting at this point is 0.97, 0.79, sorry. Here's what it looks like in terms of, in terms of expectations here, right? So we saw this basically, and I just want to bring the 3-day in here. I don't want to put in longer than that, but here's where the expectations were, right? And like I said, it was 0.9, actually was a little bit higher than that, right? And right now we're implying 90, I keep saying 97, 79. And again, you have to think about this in terms of basis points. So you multiply by 100, right? And that's where you get the 79 basis points. All right. So that kind of took, again, a little bit of pressure off, right? Does it mean like the Fed is pivoting or anything like that? No, it doesn't mean anything like that. So again, you kind of just have to take this market for what it is. I think it's overall pretty positive what how the market ended for the week, right? Because just a couple of days ago, we were very close to taking out last week's lows, and we hung in there. Now the indices still look like to me, they look very much like a mess, but we are catching some, tradable setups, right, that we're seeing in some names. And I'll go through, as I mentioned in yesterday's video, I'll try to keep it to like 3 or 5 names, right? But clearly we had a couple catalysts today too, outside of the economics. You had a surprise earnings from Wells Fargo as well as Citigroup, right? I was on Bloomberg earlier talking about when a group is so beaten up and the expectations are really low, and if you get any type of good news, what happens is kind of the move that happened today in a Citigroup. Doesn't normally move. Citigroup just doesn't move like this, up 13%, but it tells you how much bad sentiment has been priced into this stock. All right, so that was the one story for the day. And then UNH, right? They just continue to deliver really strong earnings, and I detailed an options trade on Bloomberg earlier to go long UNH. But yes, everybody seems to be in love with this sector, the healthcare. CNBC was just talking about it, which makes me a little bit nervous, but it is what it is. The trend right now in the healthcare companies, depending on which area, right? We've been very focused on biotech, as well as some of the larger cap names too. And UNH kind of fits that as well. And of course, when you look across the other names in managed healthcare, and I do like the individual names better than the ETF, right? The ETF is IHF, right, for US healthcare, but there's a lot of different companies in this, believe it or not, even though UNH is by far the biggest weight in this company. Here's the holdings, if you want to just, so this way you don't have to check the website. Bring it up again. All right, so I think UNH, oh, that's not, sorry, IHF. That's what I'm looking for. The number one weight, like I said, by far, 23% is UNH. CVS is 14%, right? And then you kind of, so there's some other companies that may not be exactly what you think, like a Teladoc is in here, for example, right? And a bunch of other companies in there too. So I think, like, if it's a little bit better maybe to play the single stocks here, because sometimes if I like the whole group, I play the ETF. But CNC almost back to highs, right? After a little bit of a nice check back, some of these names made. Right, here was a big green bar on nice volume, checking back and now breaking back higher. Humana, of course, has been another name that's been very strong. Again, a slower mover. You do have to watch because these names are reporting earnings soon, right? And Cigna, which looks pretty good too after a pullback. All right, so nice check back, and there you go. So those, this group, I think, could be where there's some strength, and pullbacks I think are important. I don't like chasing in general in this market. Very, very difficult if you chase anything right now in this market. But same thing with the managed care names. I don't want to chase these things up 3 or 4%. You kind of wait till they come back to you. All right, so that's the performance for today. I also, on these Friday videos, give you what the performance was for the week. Interesting. So down week, right? And kind of, saved nicely by today. And, if you look at the performance day by day, which we can break that out too, of say SPY, which, where did I just say SPY finish? Down 1% for the week, right? We actually had 5 red days in a row, believe it or not, because Friday was actually finished red. And then 1, 2, 3, 4, even though yesterday was just down fractionally after rebounding. Same thing with Wednesday, by the way. But you had a real nice strong day, but you add that up and you get down 1%. Right? Diamonds actually outperformed. They were almost flat for the week. Right? IWM was down 1.4%. Qs in line with that. International markets were down a bit more, especially EEM was down 1.5%. Here was also the kind of really nice area of the market. Again, I look at 30-year bond futures. They are above value. That's good. We want to see them stay up there. That's one relief, or one positive check for the bulls, is that rates are not, for the moment, are not going higher on the long end of the curve. Right, gold was down 2%. The dollar was stronger this week. I think the dollar, and that also helped today's rally. The UUP was down 60 basis points. Right, so that's that's a very aggressive move that we've seen. So a nice pullback. Look at that candle for this week, by the way, in the UUP ETF. Right, looks a little toppy to me. All right, so we'll keep an eye on that. But maybe we see a pushback in the dollar, which I think would also help things out on the equity side. Right, value actually outperformed growth this week. 0.6 versus 0.5. Interesting what the semis did this week, 3%. That's kind of where I was, kind of transitioned a little bit towards the end of the week, right? The home builders were also up close to 1%, right? You're hearing about, if you open up Twitter, all you hear a lot about how bad the housing market is getting, right? Home builders up this week. Now, I think that's helped by what bonds did this week and rates moving down. But interesting, right? Sometimes with what you read, you think, oh my God, all the housing stocks are going to be, you must have gotten crushed this week. No, they were one of the best performers. Utilities were flat. There really wasn't a lot of big outperformers. If you look on the right side here, you're going to see that some areas of the market did get crushed. Energy stocks were down a lot again this week. You had the OIH down almost 8% for the week. They still, I continue to kind of look to see what's going on in that space. I don't have any exposure to it, and I just kind of sit and wait. The solar group down 9% for the week. Now they were impacted today pretty heavily on some political stuff, but the reason why I want to just pause here for just a quick minute, right? The solar ETF almost made it, into the value area for the year, right? And it just goes to show you, and this is what this market is this year, is that, and I say this all the time, that I always have trade ideas and things where I think that are interesting. The solar ETF closed, above the 200-day moving average on Friday, right? It looked like some stocks were setting up in this space. It got crushed this week. All right. The bottom line is here to have ideas, but if the price action changes and if it changes swiftly, you've got to adjust very, very fast too. That's what this market has been about all year long, is trying to find and follow the momentum, but you have to be aware when the momentum changes and moves the other way, because it could be quite impactful. Just as solar names were down 9% for the week. The gold miners, which have looked horrible, down another 5%. Internet names were down 4%. That's kind of surprising for the week, but there's a lot in this besides just the FANG names. Steel names were down 3%, right? And here's your international performers. So I mentioned I would try to keep this video short and mention that, despite how, the NASDAQ, and you can see that I've got my triangle now drawn, we are pushing to the upside of this, so could be positive, right? We're leaning positive, but we need to see, more confirmation for the overall index. However, as we've been talking about for the last couple of weeks, there are some, there are areas of the market that are setting up, and, there are setups, right? So it's not like with this market going sideways that we're not seeing any setups, right? This Celsius, which I'm still long a piece of this, made a nice check back, just like we were talking about with the managed care names, nice check back and got out to highs, right? And what's nice about this is when you look at the weekly chart too, right? We managed to get through resistance, right? So this value area again is for all the volume and price activity of 2021. That's a really nice move. Moving back to healthcare a little bit, right? This was a very strong name a week ago, right? It just had an inside week. Right. So this is a better spot. Like if you felt like you were left out of this move, because again, some of these moves, they happen very, very quickly, right? Broke out of value, because this wasn't really a great setup while this thing was at 46. Once this thing broke higher, then everybody kind of pays attention to it and says, hey, what's going on with this name? But after that, it gave you a lower volume pullback, right? And bounced right where it needed to. So even like this is better, I think, if you're going to go after the name than chasing on one of these big candles, right? So really nice check back into the top of value. Also sticking with healthcare, but more of a medical device company, LNTH, which is a name that I've been long for a while, had to be patient with it, but it's working pretty well. A couple names in retail too that are popping up. Right? I talked about this name earlier in the week, right? As saying something was interesting that going on. I think I actually talked about this in a couple of videos this week, but Floor and Decor, right? What's interesting about this? Well, it's the first time it's been above the 50-day moving average since it started its decline back in December. To me, that's interesting, right? A couple other ones too in retail. Deckers, right? Very close. So again, this is nice because I really didn't want to put on another trade, going into next week. So this is going to be one to watch. Remember, Deckers had really good earnings a couple of weeks ago. And believe it or not, some of these retail companies, they're not expensive anymore. Take a look at when you look at Deckers, the PE ratio is a 15, 16. Right now it's a 16. Estimated PE for next year is a 15. So it's not like, oh, geez, these names are still expensive. Right. I think that this is not bad. The trigger for this will be 275. Right. Also another name too, which looks pretty interesting in kind of in this group as well, retail or going back to the floor and decor, is a Williams Sonoma, which is hanging in there above its 50-day moving average and above the 20 and above the 5-day moving average. So again, things are kind of, they're changing. We talked a little bit this week about what's Stan Weinstein's his stage analysis, right? Stage 1, stage 2, stage 3, stage 4. Stage 4 being a decline, right? And we're starting to see some stocks into stage 1 and possibly moving into stage 2. Right? Stage 1 is base after a decline, and stage 2 is starting to turn back up again. So it depends on the name, right? And some things are not exactly clear yet if they're just in the middle of their basing action, right? But it's definitely better than it was in terms of seeing more and more setups. I will leave it there. Guys, have a great weekend. If you're not a member of Tribeca Trade Group, you go right to my Twitter handle, right? And get involved here. Again, I don't make, predictions. I very much follow the price action and so forth. But the one prediction that I do make is that I think this year is going to get better through the second half of the year. So, we're setting ourselves up now, right? I'm being very patient, right? And by the way, the video is for information purposes only. I don't think I gave the risk disclaimer, but my approach right now is to be very disciplined. You've heard me say in all of my videos this weekend about being realistic, having a goal for this month. Try not to swing for the fences, right? Wait for your pitch, but maybe hit more singles than anything else. You can leave runners on in trades and so forth, but it's important to have your goals set and so forth. So that's how we're going to carry out the rest of this year. And hopefully we'll see more opportunities appear as we go along. But we still want to be really patient until the Fed actually comes out and says something different, right? And again, it doesn't necessarily mean it has to be like an action set in stone. Right, Powell can come out in 727, and he could say that we're going to start pumping the brakes. Right, it may not happen this Fed meeting, but the next one after that is September. So you have to stay tuned for that and stay patient. Manage your risk appropriately. This year has been all about risk management, and I think there's a lot of lessons that people are going to take from what they've experienced this year and move on and get to be better traders and better investors, better risk managers. Have a great weekend, and I'll see you over the weekend with the TTG weekend note.